For the past 16 consecutive quarters, Centuria's funds have featured in the top 10 MSCI PCA Unlisted Retail Quarter Property Fund Index, and the June 2020 quarter is no exception. The MSCI PCA is a league table for the best performing unlisted property vehicles across Australia that participate in the index, with a weighting towards the office sector, but including industrial, retail and the other sectors. I'm joined by unlisted fund managers Stuart Wilton and Doug Hoskins. Stuart, your ATP fund has been the top performer for the past 2 quarters. Can you tell us a bit about the principles that underpin that performance?
The fund achieved a total return of 38.6% over the 12 months to June 2020. Distributions for this quarter alone were 11.25 cents per unit annualised, which equates to a yield of over 21% on the original $1 invested, a good achievement despite COVID-19's impact. The fund holds 3 assets, all within the Australian Technology Park, now known as South Eveleigh. As of 30 June, the properties are collectively valued at more than $234 million, at 126% capital appreciation since the fund was established in April 2016. Portfolio occupancy is a healthy 98%, complemented by a 6.83-year weighted average lease expiry, and being a mere 4 kilometres from the Sydney CBD and a stone's throw from the soon-to-be upgraded Redfern station, the assets feature top-tier companies including the University of Sydney, CSIRO's data and digital arm Data61 and the Australian Department of Defence.
We're standing in an adjacent building to South Eveleigh, 8 Central Avenue, which is a single asset fund you're responsible for, Doug. Tell us how the asset has performed.
The fund's performance has been very strong. The property is co-owned by the Centuria 8 Central Avenue Fund No. 2, which has been in the MSCI PCA top 10 performing funds since Centuria started participating in the index over 4 years ago. The latest index results confirm a 16.3% 12-month total return, which is a great result for investors. The property is 100% occupied and has a 7.7-year weighted average lease expiry, which reflects a long average lease term. It's also leased to high credit-worthy tenants such as Government Property New South Wales, 7 Network, NEP Australia, and the Cancer Institute. The co-ownership was secured about 5 years ago before the major development of the precinct occurred. Over the past few years, significant works have progressed, including the development of over 90,000 square metres of high-quality office space, which is occupied by CBA on a 15-year lease. The first mover advantage has helped the fund benefit from capital appreciation. The fund purchased its share in the property for approximately $109 million in July 2015, and the latest independent valuation showed a 73% capital gain in comparison to the acquisition price. We've also seen material rental growth, supporting an average distribution yield in excess of 8.5% per annum during the term of the fund.
These South Eveleigh assets, along with other office buildings owned across our 12 unlisted funds, are in decentralised locations, that is outside of CBD zones, but within commercial areas that provide affordable rents and easy worker commutes. We believe this is a resilient strategy that helps Centuria's funds continue to deliver strong returns and keep us within the top performing indices.